Folks, how you doing? It is now Saturday night here in Israel, and what's happening with Bitcoin land? Well, Bitcoin land, we are seeing the asset already got pretty close to 124K earlier today. It is kind of chilling, whatever the movements are. It came quite close, within a couple percentage points of a new all-time high. Um, and here's the thing: it doesn't matter what it's trading at. It matters that it trades and that there's plenty of volatility and plenty of entropy, and therefore plenty of good probabilities to trade upside, downside, or sideways, and plenty of statistics that show that that's exactly what's likely to happen. It doesn't matter if it drops all the way to 100K right now, or even 90, just so you know. That doesn't mean we're in a bear market. And even if you do get an extended period of sell pressure, what people want to call a bear market, who cares? Have you seen returns on Bitcoin over the past 16 years? More than 20 billion% from zero to the all-time highs. I mean, yeah, sure, of course most people aren't holding since zero, but do you understand the insanity of the returns? Look at the last 8 years of it. Look at the last 4 years of it. Look at the last, since beginning of 2023, three years, almost 3 years of it now. It's gone up significantly, right? Like from 15K to 125K, 124K. That's a significant growth. Does that mean it can't go down to 70? Yeah, it can go to 70. Sure, why not? Is it going to go to zero? Probably not. And would strategy sell a bunch of Bitcoins if it started precipitously dropping down to 70? Probably not. They'd probably buy the hell out of it at 70. Yeah, their cost is more than 70 right now per Bitcoin. Maybe they'd sell some along the way just to cover their any potential losses, to hedge their bets, so to speak. They have sold in the past, at least one time, small number, before buying back a whole bunch more. But there'd be a lot of companies buying this stuff up. They're not going to suddenly just dump it to zero for no reason. There's too many multi-billion and multi-trillion-dollar companies, or companies that manage multi-trillions of dollars of assets, that want to see this market grow, not shrink. They don't want to dump it to zero and have everybody leave a thing that they've just invested billions of dollars into, and many years, and lots of manpower, and lots of resources, and lots of lobbying effort, and lots of legislation action, and lots of politicking and influencing. A massive investment they have made. So why would they just want to get rid of that? Right? That you got to think a little bit outside of the box on that one. They're not going to let the volatility drop it to zero for no reason for an extended period of time. They want this market zero. And now, does that mean you can't have a flash to zero in some crazy exchange? It has happened before, where somebody got like a bunch of Bitcoins for like a penny or whatever. It's happened. Usually the exchange, if it's centrally commandeered, they will undo that transaction, right? Like if you have such an outlier, they'll probably undo that transaction in many cases, but maybe not. And if you're on a decentralized exchange, good luck. If you're a decentralized exchange, you cannot do that. The transaction is directly between the buyer and the seller, right? And there is no middleman. That's the whole point of a decentralized exchange. You might be using a website that a third party created to connect to the decentralized exchange. But if it's a proper decentralized exchange, your transaction is directly between the sender and the recipient, not through a middleman. And that's what makes it, a proper decentralized exchange. Because otherwise, that defeats the point of a decentralized exchange. Right? The whole point is that there is no middleman to stop that transaction. The middleman can manage the platform. The middleman can even charge fees for managing the platform. The middleman can do all kinds of stuff. But the middleman cannot block a transaction between two contract signatories on a blockchain that has a public ledger, like Bitcoin or Ethereum or you know whatever. Litecoin doesn't matter. Hi, what is this? Is me talking about Bitcoin and crypto. Jude. Hello, Jude. So yeah, I'm just pointing out that Bitcoin may reach all-time highs in the coming days. It may happen. It also is totally moot. It's completely like it's irrelevant. If you're a trader, it does not matter. In fact, if you're a trader, really, you should love lower prices. I mean, it doesn't mean you have to be a bear, but you should love when prices tank because you get great buying opportunities. Um, or you should just love when prices gradually decline and grind away at everybody else's hairballs. Hairballs? Hair. Eyeballs. Eyeballs and hair. Because if you're a good low time frame trader, you're taking your profits every day, multiple times a day, it really doesn't matter which direction the market's going, right? It only matters that you're winning most of your trades. That's all. You're taking profit. And that you're controlling your losses. So say you have whatever, 100 trades in a day. This is just an example. And you lose 10 of them, but the amount that you lose on those 10 is always the same, not more than 1% of your capital that you're willing to put on that trade, right? And that way, if you win 90% of your trades, and you only lose 10%, and you've only lost at most 10% of your capital that you were willing to trade in that day, at most, and you've made 9 times as many wins, even if those wins were only half, like 0.5% or even 0.3% versus 1% loss, you still outperformed your losses, right? Significantly, because you have 9 times as many trades that you've won. So even if you only made a third as much, you still 3x your losses in gains. Now, if you're a cautious trader, you shouldn't lose the whole 1%. You should take the money out before it reaches 1%. And one of the easiest ways to do that is to not use leverage, because then it doesn't get to 1% so quickly. One of the things about trading is if you see the money move so quickly, you get excited when it goes in your direction, and that increases the fear when it goes against you, because the time it takes to go from neutral to for you or against you is a blink of an eye. And if you use something like 3, 4, 5x leverage, it can reach 1% very quickly in a matter of seconds or a minute or two, right? And so that's easily one of the easiest ways if you don't want to be in such a rush. Just don't use leverage, or use 1.5x or 1.1x, or keep it under 2 if you can. Then the amount that you lose is going to be a lot less if it goes against you. In other words, you'll have more time to pull out. You should still trade low time frames, but you'll have more time to pull the trigger and not worry about whether you get out at that exact split second. You'll be able to run the trade, whether it's now or in 5 seconds, and still get out for relatively the same amount of loss in most cases. Sure, it can happen in a split second that it shoots down even more, but that's also the beauty, like if you're in the long, but that's also the beauty of taking that kind of a position with low leverage or no leverage. Because then if it does shoot down even more, what do you care? It goes down another 0.2% or 0.1%. It's not the end of the world, right? But just get out before it reaches 1%, and preferably even less than that. Preferably if it's, think about it. If it's going 0.2% against you or whatever, why be in that trade? Now you got to wait for that to get back to the other side, which it may do in an instant, but it may also take hours or days to get back to that area. You don't know until you run the trade and it's going in the direction that you want. That's why whatever trade you take, you really gotta be in the habit of getting out of it as soon as it hits the target, one way or the other, an in target or an out target, like a take profit target or a get out target, right? And you got to set those targets before you, like in your head, you got to know what those targets are. Percentage going up, percentage going down, and you got to hit them. When you hit them, you got to take your profit. The only reason not to take your profit is if you see you're at the start of a new big move, and you have indications that show you this thing is set to make a significant move, and you can watch. You keep your eye on it, and you make sure that it still continues to do that, and you manage the exit button very clearly and very tightly, so that if God forbid it even begins to hint that's going to turn around, and you just get out as soon as it starts to slow down too much, right, in the move. Look where it is. See if the indicators are telling you it's time to get out, or it might time to be just time for a quick take profit and reposition, right, from maybe a lower number or a higher number, whatever direction you're going, right. So that's why it doesn't matter if Bitcoin hits an all-time high. Like, it doesn't matter. It doesn't matter that analysts predict it will go to multiple millions of dollars. It doesn't matter. Sure, big picture, can it do that? Of course it can. How's it going to help you trade today? It's not. It's not going to help you trade today. That is the point, right? If you want to actually know how to trade today, you're not going to do that by reading the information that analysts predict for the next 5 months to 10 years, right? It's not relevant. It's not relevant. What is relevant are the means of returns on investment, the actual returns on investment, the standard deviation on returns on investment, entropy, probability statistics. Right? Those are the things that actually will make a difference, okay, in the big picture. Those are the things that will actually determine whether or not the price is going up, down, or sideways. It has nothing to do with whatever piece of news it wants to claim it has to do with. It just doesn't. It's all about the maths, the relevant maths. So, as I always say, show me the charts and I'll tell you the news. Right? It's an old saying. I didn't invent that. It's an old saying. But it's very true. If you know how to read the actual information on the charts correctly, then that's usually how it goes. Just downing some nice cold water. But yeah. So Bitcoin, I mean, again, there could be some all-time high action. Yay. The reason we look at low time frame information when we trade is because high time frame information is not really useful for trading. It doesn't matter to you what the price will be in 5 years when you're running a trade today. If you think you're running a trade today and it's going to last you till 5 years from now, guess what? You're not running a trade. You're running an investment, right? And an investment is a trade that lasts a relatively long period of time. A trade is something you do that lasts a relatively short period of time. Now, you could run a trade and then it can last longer than you expect. But if that trade starts to last a lot longer than you expect, like weeks or months, you're definitely an investor. And in the world of crypto, if you're holding it for a week or more, you're already an investor. I'm not saying that's good or bad. I'm just pointing out the degenerative nature of a lot of traders in the alt space and the crypto space in general. That if you're holding anything for more than a week, you're like just a short-term investor. And anything longer than that, you're a long-term investor. Anything longer than a year, they're like, "Oh, you're a OG hodler or something nonsensical like that." But sure, plenty of people have been holding their crypto for many more than a year, but a lot of people don't, especially in the trading business or in the trading world, even if they're not actually traders. They're just trying. They're really just degenerate retail gamblers in most cases, which is, honestly what most traders really are. Most retail traders are degenerate retail gamblers because they're trading with lagging information, right? Which is why to them, when they hear, oh, there's an all-time high coming, this is when they buy in, because everyone in the fake YouTube Jimmy trading world, fake guru, fake trading world, always tells them, oh, you should buy when there's all-time highs. No. Yes. I mean, you can buy and sell when there's all-time highs if you're trading low time frame volatility, but you don't just buy because there's all-time highs. If anything, you should be looking to sell when there's all-time highs if it's reached certain targets, right? Why? Well, because when it reaches all-time highs, people typically have a lot of FOMO going on. Now, it could be that it creeps up past 124. I mean, right now, what is Bitcoin at? Like 122? No, let's look it up. Yeah, 121,757, close enough to 122. The high yesterday was 123,941 on the index chart, real close to 124. The all-time high is 124 and a half, something like that. So it was $500, $600 from the all-time high. That's nothing. It's already come down more than that, right? It's come down a couple grand from yesterday, but it's not down a lot. What is the price right now from the all-time high? I'll tell you. Let me still switch this time frame. It's easier to see. It's easier. There we go. Right now, from the all-time high, we're talking 1.64%. Okay, and yesterday it reached to within 0.32%. I mean, there's nothing. It's nothing on a daily candle at all. So it could happen, and there's plenty of room for it to run on the daily. And we are in a trending move on the daily. Doesn't mean it has to happen today or tomorrow or the next day. In fact, it could start rolling back over, and we could have another deep period of people starting to FUD. Oh no, it's going to 100K, like as if that's a problem. It's still $100,000 for a Bitcoin if it goes to 100K. That's a lot of money for a Bitcoin for most people. But for big bag investors, it's just near a trifle, right? They view that as hello there, Denny, and hi there, hi. The big bags that own a bunch of this stuff, they view it as a great discount, 100K for a Bitcoin, like a massive discount. They view this as a risk-off investment at this point because of all the regulation that has been in the favor of Bitcoin and other leading cryptos around the world and in the United States, with the reserves and with the regulations and legislations that have passed, the Genius Act, the Stable Act, whatever. All these things, and huge whales buying masses of, they own this stuff now, right? They've readied the market. Can they keep dumping it out a bit more? Yeah, in fact, I wouldn't at all be surprised to see quite a head fake on an all-time high or close to it. We might have hit it already. Hi there, Denny. Then we might have hit the close to the all-time high that's high enough to keep the FOMO people in, and then short the hell out of this thing, right? For like a big snap down, take all their liquidity, and then run the sucker back up, maybe quickly, maybe by the end of the month. Who knows? We'll see. Again, none of this matters. It's all conjecture. You want to know what the actual information says? Look at the low time frames. It's very telling. It tells you what's happening right now. Like it doesn't matter what you think is going to happen tomorrow, or even at the end of the day if you're just starting a new day on the time frame. It doesn't matter because all that happens on the low time frames first, and it just builds up what you see on the higher time frames, right? The higher time frames are just a product of all the action happening on the lower time frames. But the lower time frames are where you get your scalps and your trades in and out and rack up your gains throughout the course of the day as the assets follow the returns up and down all day. So up, down, and sideways. A lot of sideways. That tends to drive people crazy. It's really, I find it's fascinating. I find that it's the sideways that a lot of people have issues with that have mentioned it today. The action up and down, no problem. They'll get in, they'll get out. But it's the going sideways that drives people crazy and makes them lose a lot of money because they're always sure it's going to go their way when it's just going sideways. Like if it's just going sideways and it's not already going your way, it's probably not going to go your way, right? Yes, there may be all the indicators in the world telling you it will, but if it's just going sideways a long time and you're at neutral or a slight loss, you know, it's almost always going to go against you just because of, you can say Murphy's Law or whatever, but there's outliers all the time and you just got in at the wrong time. And that's why it's important to just get out quickly. Like if it doesn't move your way very quickly, especially in crypto, which moves super quickly, you should just get out. Anyway, so yeah, I hope you guys have learned from that. If you like that, if you have any questions about what or if you have any comments about what you think Bitcoin is going to do, feel free to post comments in the live stream here in the chat on YouTube's. If I see your question, I will respond to it most probably. And if you're one of those people that post things that shouldn't be responded to, then I will not respond to that kind of thing. But yeah, that's my take on Bitcoin right now as we cruise through this day, Saturday, with about another, 6 hours or so left on the day. And just under 6 hours, yeah. And yeah, again, the asset is in a trending move on the daily. Like all indicators are looking great on the daily. Volatility is saying up across the border on the daily. COV is saying up. Returns oscillator, it's saying down on unsmooth and up on smooth. Right. AVQs are looking up on the long length and starting to turn down on the low length. Right now, the asset, like I said, is in a trending move, but the direction predictor on that entropy is actually to the downside for now. Even though you do have for now the entropy expanding in a trending move at the third standard deviation and the correlation significant and positive expanding also. So normally that would indicate a move to the upside. But so far on the day, we've had a move to the downside 0.34%, which is not a big move to the downside, but it is still a move to the downside for now. So the thing that's giving the indication of, again, of that down move is the APP, as well as the direction predictor and the direction predictor 2. Sorry, the direction predictor is looking to the upside, but direction predictor 2 is looking to the downside, and that short length AVQ, as well as that unsmooth returns oscillator. The other things are still looking good to the upside for now, and it may turn around by the end of the day. But again, it doesn't matter. Right? We've got a very gradual testing at the top of the power mean ribbon on the 4-hour. It may dump down to the RWT somewhere around 117, 556, 566, whatever, or higher, depending on when it hits it, this candle, the next candle, or the candle after that, or whenever. It may also just find a nice bunch of buy pressure here near or at the top of the power mean ribbon and start climbing again. Right? It definitely has room to run. It definitely has room to run. And it just mean reverted again. You got to remember to the 3012 RMLR on this candle and the last one. So it's set for a move away from those RMLRs, which are quite close to each other relatively. In fact, the 1110 that's above it is, yeah, is it like 123.876 or so. It could move towards the upside anyway. There's plenty of room for it to move up or down. Plenty of room on the 4 hour. Right now, 4 hour has some indications that, frankly, look down a little bit. Um, but, you know, there is some positive, there's some upward looking information and some downward looking information. That's why you got to be able to read it. Like AVQs are looking down. COV is really looking kind of up, but not a little bit down, to be honest. Like the COVA's rising was not significant, and it is positive correlation, but it's going sideways. So if it starts to rise, then yeah, it'll be positive a little bit. That's probably what we're seeing right now. Anyway, is it going up? It's going up a tiny, I mean, a hair. Entropy is contracting on correlation that's contracting and not significant or less significant, and direction predictor 2 there is looking at the downside. Direction predictors of the RMLRs are both to the downside. I mean, it certainly could take a bit of a haircut here. And if it dumped down to, 116, whatever, to hit that reverse wave trend, or even dump down to the bottom of the power mean ribbon and the Fisher right in the same place at around 113.537 or so, that would be an easy place for it to find support. Not support, buy pressure. Sorry, I know I call it support sometimes just to make it easy for people, but there's no such thing as support. And there's just resistance. It's just buy pressure and sell pressure. I just call it support or resistance sometimes to make it easier for people who don't know. But yeah, if you look also at the 15-minute, it's a relatively tight day on the CDR. We've had a little bit of a trending move in the last few hours or so on the 30-minute. On the 15-minute, we've had some trending moves today. All right, we had one relatively early on in the day, a couple hours in, 2-3 hours in. Then we had another longer one, around 4 or 5 hours in, and now we had one 3-4 hours ago, and it lasted for a good hour and a half or so, a couple hours even. It's kind of faded off and back into random walk now on the 15-minute, and the CDR has been tested. So it's made some trending moves as expected. Nothing huge, easy, right? But moves that are a couple of grand from the highs of yesterday. Bitcoin, and you didn't trade any margin, any leverage, just spot trades, and you were in the right direction. Given how much it moved up and down, up and down, up and down during the whole day, you could have made more than a couple grand in the day if you'd taken multiple trades. Trades going down, and trades going up, and trades going back down again. You could have made some nice trades. It all depends on your position size, and all that stuff, right? And again, that's why if you do use leverage, you got to be real careful about the time you spend in trades. Real careful. You just got to keep your risk management tight. Like, again, if you're using something like 5x leverage, just as an example, easy math. We could use 10x, I guess, if you want, but we'll just use 5x as a thing. So, without any leverage, if it moves against you 0.2%, it's 0.2% against you. If it moves against you 0.2% and you have 5x, it's against you 1%, which means if it moves against you 0.2% and you're in 5x, you should be getting out of your trade. It doesn't matter if it goes back up. You agreed 1%, you're going to lose 1%, lose the 1%, and go to the next trade. Even if it bounces immediately back to where you would have been at zero, you've lost the percent because that's the game you played. That was the gamble you took, right? That's the risk you took, right? It's not the degenerate gamble if you're using leading information, but it's still a risk, right? If you risk 1% and it goes against you 1% and you haven't gotten out before it hits 1%, you should get out. But that's another reason, again, not to use 5x leverage or higher, because it will go against you in a matter very often of like 30 seconds or less. Very often, very normally, it will go against you. Depends what you're trading. Depends what kind of, if you're trading like a meme coin or an altcoin, it can easily go against you, a whole percent, because you're using 5x leverage in 30 seconds. Like practically every meme coin and lots of altcoins and even sometimes Bitcoin, right? So because of that, you got to be careful, right? You got to be fast, and that's why you really don't need leverage runway in front of you, and you don't need you're not sitting here degeneratively gambling it away, right? And you have time to make the right trade, so you're not rushing yourself, but you don't need to be in a trade a long time, right? You can be in and out within 15 minutes and do that any number of times in a day. And and not get stuck holding positions that are just losing positions. It's not worth it. Like, if you can cut your losses, you should cut your losses. You really should. Too many people don't do that, and they end up paying a very heavy price. Um, and sometimes even liquidation. Like if they put leverage on and they wait years to close their position, sometimes the exchange will close it for them. Either by crushing the market down to where it's a liquidation point, or by just closing your trade. Sometimes it happens. And by the way, they used to happen quite frequently when trading on exchanges was even riskier than it is today in many ways. If you were here for those days of crypto, well, trades aren't always what you think they're going to be. Right? Exchanges can do some funny things. Sometimes intentionally, sometimes maybe not intentionally, but they definitely are subject to funny business in some ways. And that's why you got to be careful to protect your assets as much as possible, so that you don't run into a situation where you're running a trade and all of a sudden your trade is running away from you in the wrong direction. It's taking your money. You don't want to be in that situation. It's like, do the math. For every candle, if you're trading even on a 30-second candle or a 1-minute candle, for every minute that you're going to trade the wrong way, there's a likelihood you're going to have to be in that same trade for another 2 minutes before it gets back up to where you were. If you were in a long and it goes short, or if you were in a short and it goes long, you're going to have to wait for 2 minutes before it goes back to where you entered. If you're wrong, there's a likelihood. There's a pretty good probability. Which means you just wasted 2 minutes of trading when you could have entered a trade and been practically immediately in a better position. And if it goes in your direction for that candle, you got to still manage your probabilities, right? Because they change candle by candle. And if it's in your direction in that candle and you're approaching your target, you should take profit when you get even near your target, frankly, so that it doesn't just shoot back against you. And you might say, well, that's no way to trade. I'll say, why not? That's actually a very smart way to trade, because it ensures that you have a higher probability of getting out of the trade with profits. And you can say, well, then you can never get huge trades, you never get huge wins. It's not about getting huge wins. It's about stacking up lots of little, right, and day out, those positions constantly, right? They make trades all day, and they close their trades all day. That's how they win the market, by doing lots of little trades, not a few big ones. Because have you seen the market? It's extremely volatile. There's a lot of randomness, except for when it's in trend, which is only about 20% of the time on average on any asset. Except for when it's in a trending move, it's in a random walk, which means it can do some crazy stuff because it's random. So why take the risk of just sitting in trades if you've already hit a solid profit taking target like a VRE level or a mean reversion to the RMLR or a hit of an outer band on the RMLR? If you've hit any of those targets or probability levels, whatever, why would you stay in the trade? Just so you can potentially lose money? Oh, because you're afraid you could make a little bit more and you might miss it? Let me explain this to you. You will never make, ever, ever, ever make all the money you could have made in trading. It is statistically impossible. You cannot be in all the trillions of trades happening every year. You can't be in all of them. You can only be in the trades you make. And no matter how many trades you make, even if you run a fucking HFT firm, your trades in the universe of an HFT firm who runs millions of trades a second, considering how in the big history of all, statistically insignificant. So if you're a retail trader and you're making less than 1,000 trades a day, you're barely a noticeable signal on the radar, right? You're just noise in the market. You are one of the lines going through the Monte Carlo distribution, the bell curve, right? That if you send out thousands of random lines in a normal distribution, you'll typically see that they form the shape of a normal distribution after thousands of random walks, because most of it will be random, right? Some of them will be trending, but most of them will be random. And if you take the Monte Carlo distribution that uses thousands of random walks as an example, you always end up with that bell curve shape. You ever wonder why? Because the statistical probabilities indicate that if you send data from A to B over a period of time, whatever it is, one every second, one every or 10 a second or 1,000 or whatever it is, and you measure them, and you measure the path they took to get from A to B, they will normally form a normal distribution type shape. It's very normal. They will also form Laplace distribution shapes. Right? Again, it's not the shape we're looking for per se to trade. Like, it's not about looking for shapes on charts. It's about the law of numbers, right? That most things distribute within a normal distribution. And many things distribute within the Laplace distribution. That's why we use Laplace distribution at alpha trading, among other things. So anyway, that is my take on Bitcoin and the potential for the next all-time high being at around 124 and a half, something like that. If it gets there, I guess it'll be 125. It'll be, if it hits literally 124 and a half and drops, that would be funny, because I beat the last record by like a few bucks. But if it goes to 125, then people will say, "Oh, it's 125. It's a proper all-time high record," but it isn't a noteworthy one in that it didn't go significantly higher than the last one. If it goes to 130, 135, 140 over the coming weeks, maybe 150. Again, none of this matters day trading wise. But if it gets to 150 before the end of the year, a lot of people will be really excited. A bunch of people will be really disappointed. Whatever it does, a bunch of people will be excited and a bunch of people will be disappointed, right? What you can do is to know about it at least, right? If you're not into Bitcoin yet, yeah, that's your call. I think it's an inevitability that people will be more involved in it, whether they like it or not. And if not necessarily Bitcoin, some other crypto, even if it's just stable coins for now, I think that's going to become more and more normal in the coming years. I still think that there's going to have to be something like cash for homeless people who don't have a bank account and don't have necessarily a digital wallet or access to a phone that could enable them to have that. So I think you're still going to have cash and coins for the time being in the United States. I know other countries have basically done away with it. Those other countries don't have the same kind of homelessness issue and unbanked issue that you have in the US. In countries where they do have those issues, they still have cash and coins. So, anyway, that's my take. Big picture, higher when is completely irrelevant. What matters is if you're trading it, you create low time frames. If you're investing it, you just buy and hold and chill. I mean, if that's your choice, right? If that's what you've chosen to do, but that's what you can do. Like, what is the best thing that a Bitcoin holder ever did from the time it was $0 until now? Literally nothing. Just hold what you have. Don't do a thing. It's gone up 20 billion%. Do you really need more of a reason to just chill? Right? Even if it dumps by half and you from zero, you're still at 10 billion% profits. Like, that's pretty good. And the probability of it dumping by half right now, not that it's not possible, it certainly is. But again, it doesn't matter. If it's dumping by half, you're getting a hell of a discount to buy up more, right? So it'd be selling on the way down. And if it's going to pop up by 50%, be buying on the dips on the way up. Don't buy at the highs on the way up. Buy at the dips on the way up. And you do that by looking at the low time frame information and being aware of what that is in the big time frame. You got to know, you got to have your workflow, right? From high time frame all the way down to low time frame, because the high time frames are made up of the low time frames. So what happens on there is a reflection of what happened on the low time frames, but you got to remind yourself sometimes what is happening on that bigger time frame, right? Because if the picture changes there, because of what's happening on the low time frames, you want to be aware of that. That might affect the duration of your trade. It might affect the entry point. It might affect the hold area. It might affect the take profit areas, right? It might affect your get out area. Like, you might see that you have reason to get out of a trade immediately when suddenly higher time frame information shifts and is either in line more with what your lower time frame information says, or is the opposite, right? If it's against it, that could definitely change the forecast of what you should be doing, right? Let's say you enter a trade for whatever reason 1 minute before or 2 minutes before a 4-hour period of time, a 4-hour candle ends and a new one begins. That information could change pretty radically on a 4-hour change, right? You could see a whole bunch of new levels for the 4-hour distributions of Laplace and normal that can radically change your forecast for the coming 4 hours, which is a very long time if you're intraday scalping. And you don't want to be stuck in a move for 4 hours, right? As a scalper, you don't want to be in a 4-hour move. That's too long. So how do you avoid that? Well, keep watching this channel and you'll find it out. And until next time, keep on Bitcoining. I don't know. Be safe, happy, trade. Oh, yeah, and like, comment, subscribe, and share. That would be groovy. I'd appreciate it. If you would do this for this channel, it mean the world to me. That's it for now.